Good day, friends. We are discussing on the subject of financial markets and institutions. In my previous lecture on financial markets and institution, I introduces the concept of the components of the financial system in the country. And broadly speaking, there are four broad components, four broad systems, parts that makes the financial system, and the fifth one is the regulator. So in this way, there are five important constituents of the financial system in any country of the world. And some of the components we discussed in the previous lecture, that is, we talked about financial institutions, we talked about financial markets, we talked about financial instruments or assets or securities, the different financial instruments that are there in the market. And in my previous lecture, in the last lecture, I was talking about the financial services. When I talk of the financial services, basically the financial services are those things, financial markets if I say, is a common place where the buyers and the sellers of the financial instruments meet and exchange products, right? So under the unorganized market, there are large number of indigenous bankers, money lenders, traders, etc., who lends the money to the public at large through informal sources like private financing, components and chit funds. This also we discussed in my previous lecture, that the financial market can consist of the unorganized market and the organized market. See, in the unorganized markets, we talked about those money lenders which are not being properly regulated, those markets which are not being properly regulated by a regulatory body, there is no strict control of the government, they are not being regulated by proper rules and regulations. And then we talked about the organized market, that the organized market consists of the bankers, the institutions and all those things which are properly being regulated by the market. And then comes the financial services. In the financial services space, the important components of the financial services are the credit rating, venture capital financing, merchant banking, depository services, book building, leasing, factoring, and there can be many others. These are the few of the financial services. When I talk of financial services, these are basically the intermediaries that works as a bridge between the investors who want to lend, who want to invest their money, and the borrowers, right? So those people who want to lend the money and those people who want to borrow the money, there are a whole host of services that are required for the bridging the gap between the two, which facilitate this transfer of money from the lender to the borrower. And some of the agencies, because all these agencies, these services which I am talking today, this is only the introduction, what it means. And we will have an elaborate discussion on these intermediaries while we talking of separately on these different intermediaries. So just to introduce you with these intermediaries, I'll say like credit rating. What the role of the credit rating agencies is, what is credit rating means. Let's understand the meaning part in this lecture only. There are a whole host of financial instruments, specifically the debt instruments. And as an investor, if I want to buy the debentures of a company, I have not the expertise to see that what is the credit worthiness of this company. Or I want to make fixed deposit in a private company, because as you know that not only the commercial banks, the banks accepts the fixed deposits, even the corporate houses accept the fixed deposits from the public. That is, the general public can also make fixed deposit with the companies. Or even the companies are coming out with debt instruments which they want to lend to the financial institutions. So if I talk of a common man and as a common investor, as a retail investor, I have not the expertise to read the financial health of the company. I cannot make out whether this company will able to pay the interest on the debentures in time, whether the company will be in a position to repay my principal amount at the time of redemption of the money. That is, if the time horizon of the instrument is 10 years, then after the 10 years, when the time of the repayment will come, whether the company will be in a position to repay the money, the principal amount, whether during the tenure of the debenture, the company will be in a position to serve its interest liabilities to its debenture holders. For that purpose, in order to check the financial health of the organizations, there are internationally and nationally, there are various credit rating agencies, right? Like in our country, the CRISIL, ICRA, CARE, there are various credit rating agencies. What these credit rating agencies do, they rate the debt instruments, right? And if the company's credit rating is high, right, it means the lenders the people who wants to lend the money, the people who want to buy the debentures, if I put it simply, they can easily trust that this company is a highly rated company, is being rated by the reputed credit agencies, and they can lend the money. And if the company has a good credit rating, right, then investors presume that the risk involved is low in the company. So the investors are ready to lend the money at an even lower rate of interest. A company which is having a poor credit rating, right, the investors finds the risk is high, so they are not ready to lend such company at a lower rate of interest. What it means is the credit rating agencies rate the companies, the institutions, even the countries. There are many international agencies, international credit rating agencies, which even rate a country. You might have read in the papers that the countries, India's credit rating has enhanced from this to this. I am not intentionally naming the credit agencies, just to give an example like Fitch. Right? So Fitch is an international agency which rates a country. So if the rating increases, if the rating goes up, and these ratings are in the alpha numerical form, if the credit rating agencies rates a country or rates a country at a higher pedestal, then it is easy to get the money at a lower rate of interest. Means your credit worthiness is high. So this is the role of credit rating agency. At this moment, I am only explaining the meaning of these things. Similarly, there is another intermediary, there is another financial services that is a part and the parcel of the financial markets and the institution is venture capital financing. You want to be an entrepreneur. You have the good ideas. You want to do business, but you lack capital. For starting of the business, for running the business, for expansion of your business, at different levels of business, at different levels of venture, the money is being needed. The money may be needed for starting the business. The money may be needed for working capital purposes. Money may be needed for expanding the business, right? So what the venture capitalist, normally we call them venture capital financing. These are various individuals, high net worth individuals and the companies which are in the business of venture capital financing. They read the project, they study the project of an entrepreneur, and if they find the project worthwhile, then they lend the money. They can lend the money in form of equity capital, right? Or it may be in the form of the even debt capital. I mean, you are a young educated person. After your graduation, you want to start your own business. Government of India is focusing a lot on entrepreneurship. So you want to start your business, you have good ideas, you have the courage to start your business, you are ready to take risk, but you don't have enough capital. So what you can do is, you make a project report, present your ideas to the venture capital financing firm, and if the venture capital financing firm or the venture capitalist, which we normally normal language call it, right? If they find your project worthwhile, they will lend you the money, they will finance you, right? For even your starting the business, even for starting the seed bad capital, the initial capital which you require for starting the project. So these venture capital financing intermediaries, the firms, they help the business in financing in different ways. Means either for starting the business, for running the business, for expanding the business. This broadly mean by venture capital financing. Similarly, merchant banking. There is a very important role which the merchant bankers, and we also call them investment bankers, plays in the financial market system, in the financial institutions. Broadly, what is the role of merchant banking? Let me give you an example. I want to come out with an initial public offer. I am running a business. Up till now, my business is in the private limited form, or I am running a business even in the partnership form. Now I want to make my business in my organization as a company, and I have registered myself as a company. When I am using the word I, means my company is being registered with the Companies Act, within the Companies Act, and is a registered company. And the company is interested in floating initial public offer, right? That is, it wants to raise money through public by issuance of shares. There are a whole host of regulatory procedure which is required to be fulfilled, which is required to be, under SEBI guidelines, under Securities and Exchange Board of India guidelines, right? There are a whole host of the regulations which you have to follow while coming out with a IPO. And since you have expertise in your own business, so you are not expert in the business of coming out with an IPO, or you are not expert of the Companies Act. So what you can do is, you can take advice of, you can take help of these merchant bankers and investment bankers, which will guide you, which will see to it that the whole regulatory process, even your advisory role, that is at what price you should issue the share, because you are already a company, you are already a registered company, you are already a profit-making business, so you don't want to come out with a 10 rupee share at a par value. You want to come out in the market with a premium. You want to float your share of 10 rupees share at a premium. So what is the right price? What the price market is ready to pay, right? All this is being done by, all this work is being performed by the merchant bankers. Not only this initial come out, I am just giving an example, even mergers, amalgamation, acquisitions, all these things are being guided by, helped by, and these are the specialized agency who are in the business of guiding the companies for mergers, for acquisition, for takeovers, and all these things. So this is basically the merchant banking. Then comes the depository services. You might have heard the term NSDL, CDSL. These are the two important depository services in this country. National Security Deposit Company and the CDSL, Central Depository Services Limited, right? So NSDL and CDSL, they are two important depository services in this country. What is the role of these depository services? No longer financial assets are being kept in physical form. Means, especially I am talking of the equity shares, or even these days, even gold, debt instruments, your insurance policies, right? These depository services are like the banks. In layman language, I will say these depository services are like banks. They provide paperless services. That if you want to buy the share, if I want to buy the share, what you will do is, you will open an account with a depository, right? Whatever the shares that will be purchased by you, that will be transferred by your broker to the depository account. Your depository account is like a bank account, right? So in a like the money is being deposited in a bank. Similarly, all your shares, your equity shares, your even debt instruments will be deposited in these depository services. If you want to transfer somebody, just by issuing orders, you can transfer your shares from your own account to the person to whom you have sold account. Suppose you have sold through brokers. Normally we sell in the stock market. So stock market, the person, you will issue a slip, or you can issue even these days with the if you allow your broker, right, automatically NSDL will, the moment you will sell it, means the NSE, that is the stock exchange through which you have sold the share, will transfer your shares from the seller to the buyer. So this is the basically depository services, which is a very, very important services for the financial market, for the growth of the financial market in this country, right? While talking about the investment management, while talking about the stock markets, we have discussed in detail about these depository services. Similarly, there is many other very important service that is called book building. What you do in the book building is that when the company issues the shares these days, for that matter, even other instruments, there is no fixed price, but I am sticking to equity shares. There is no fixed price at which the shares are being issued. There is a broad range in which the subscribers can subscribe the share. Suppose a company is coming out with a public issue and it offers the share at a range of 480 to 500 rupees. That is, a person who wants to buy the share can buy it in the range of 480 to 500. Means the buyer will have to put the bids. And these bids which the buyers will offer, which buyers will apply, right? Through the book building process, this share price will be determined. So this is the job of the book building. That is, through book building, a particular price at which the shares should be issued is being decided. Because as per the SEBI guidelines, when a company comes out with a equity share, issuance of equity share, doesn't offer, especially in the stock exchanges, NSE and BSE, the large companies, they don't offer at a particular price. They issue the shares in a range, and what exactly at the price which the shares will be issued, it will be determined through book building. Similarly, there is another intermediary services that is called leasing. Just to give you an example, I want to buy the building of machines and buildings of 100 crore rupees. I do not have the money of 100 crore rupees to invest for my business in buying the machinery. What I can do is, I can contact to a leasing company which will lease me these machines. That they will offer me these machines, and every year they will charge a leasing charges. Because I don't have 100 crore rupees at one time, rather I have the capacity to borrow it from the banks, so I am not in a position to arrange these 100 crore rupees. I'll approach to a leasing company, I will approach to a leasing agency, and these leasing agencies lease me for a particular period, for 20 years, 30 years, 40 years, and every year they will charge a lease. It means what the leasing company will get? Leasing company will get its annual charges, right? So what I will get, because I am not in a position to invest 100 crore rupees, so by paying an annual premium or lease money, right, I will be able to use this 100 crore rupees worth of machinery. So this is the very big amount of investment is being made through leasing companies or through lease. Similarly, there is another financial services that is called factoring. What we mean by factoring is a receivable which a person has, which a businessman has. These receivable is being sold to a factor. Means the agencies which offers the factoring services, they are called factors. They will pay you the money in advance. For that, they will charge a commission. What I am saying is that factoring is a service in which the factors provide the money to the person who has certain receivables. Say, a businessman has sold goods worth 10 crore rupees to a company, say XYZ Limited. And this money with this sales which the businessman or which the company has made to the another company, the company which has purchased, it has purchased on the condition that it will give the money after 3 months. Means 3 months is the credit period. So a company which is a seller, they need money. What they will do is that they will approach to a factor that I have this 10 crore rupees worth of receivables which I am supposed to get after 3 months from such and such company. You, against this receivables, you provide me the money. So what the factor will do? Factor will buy your receivables that is, suppose on a 10 crore rupees, it's say, 3 months interest it will charge, or we call it charges or commission, right? So, say for example, it comes to be 20 lakh rupees. It will give you 9 crore 80 lakh rupees to the seller and pay you 3 months in advance. The money which the seller has to receive after 3 months, the seller has only receivables in which, as per the sales conditions, the money is to be received after 3 months. But since the seller needs money, the factor will provide the money in advance. So all the receivable rights will be transferred to the factor, right? So in this way, you can encash your receivables in advance. So this is about the factoring services, right? So these are the various intermediary services which are very popular which are not only popular, I would say, which are very important for the financial markets and institutions. That is, for the growth of the financial market, for the growth of the business in the country, these services are very important and required, because in the absence of these services, there will be the scale of business which will be at a lower level. Means if you want to expand your business, if you want to make a capital formation in the country, if you want that your business should grow, you need these services, right? So because, as I said, if I talk of the credit rating, the job of the credit rating is it will rate your instruments, it will rate your company, it will rate the country. So because these credit rating agencies have expertise in studying the balance sheet, in studying the profit and loss account, not only studying the balance sheet and the profit and loss account, but they can see, say for example, in which business you are, what is the status of that business. When I use the word status, means whether the industry is growing at a fast rate, whether the industry is at a slump, what is the expected growth in the industry, at what rate company can grow, what is the quality of the management. All the various factors, the quantitative factors and the qualitative factors, are being studied by these credit rating agencies, and on the basis of that they rate a company. Similarly, the venture capital financing, when we talk of the venture capital financing, that the entrepreneurs needs money at different stages. So these venture capital financing do provide money, without a lump sum money, a large sum of money. I'm a graduate, fresh graduate. I've done my graduation, I've done my MBA. After MBA, I have some business plans. Wherever from I'll get the money, right? I'm a technocrat, but I do not have the money. So these venture capitalists will provide me money for financing the business, right? Similarly, the merchant bankers, the investment bankers, all these mergers, acquisitions. You think of the companies when 10,000, 20,000, 1 lakh crore rupees worth of companies are being acquired by one company or the other company, not only in the local market but internationally. So when you acquire international companies which are having business internationally, it is very difficult for a company to value the company, at what price they should acquire. So these merchant bankers, these investment bankers, they have the expertise in these fields, right? They guide the company in merger, acquisition, floating of new issues, right? Coming out with the IPO and all these services. Similarly, I talked about depository services. Basically, these depository services provides you that instead of keeping the financial assets in physical form, they keep it in the banking form, I would say simply, in the depository forms, and just by transferring by mail or by transferring a slip, the financial assets can be transferred. So there is no fear of loss of this, no fear of burglary and all those things. Just by the way you issue the check, similarly you can transfer your financial assets also. Book building is an exercise at the time of IPO, at various issuance of the instrument, financial instrument, right? Especially the equity shares. Instead of one price, you can have a different price level, and on the base of that, one particular price is being decided. Leasing is similarly another way of financing. There are certain companies which lease their assets, especially if I talk of the fixed assets, they lease their fixed assets to another company for a price, right? And every year they charge money. Factoring for receivables, the factors provide the advance money. So these are the various financial services, financial intermediaries that constitutes the financial markets. So rest of the things I'll be talking in my next lecture, but this is about the various financial services that is there in the financial markets and system. Thank you very much.